Kia good morning. Well, the rotation continues. Thanks to the Sky City fire keeping us on our toes, our Auckland office is closed for today. So after a quick juggle of schedules, I'm back on duty coming to you from a smokeless Wellington deli room. And this is Kiwibank's Markets in a Minute for Thursday the 24th of October. Geopolitical themes continue to dominate investors' attention over the past 24 hours or so. Rumours of a potential change in the Hong Kong executive leadership and a mild disappointment and perhaps concern that Brexit won't be delivered by the end of October with a risk of possible new UK general election has seen equity markets trade in a relatively mixed and muted fashion. Whilst Boris Johnson managed to have his new agreement passed in principle through Parliament yesterday, he failed to garner enough of votes to have it put into law by the current Brexit Halloween deadline. Further comments from EU President Donald Tusk overnight that he would support and recommend the EU grant further extension come on the back of comments from Johnson suggesting that if this is the case, he will simply call for new UK elections to attain a refresh mandate to move things along at a quicker pace. Of course, by giving the power back to the people is a bit of a risky play in itself, as this could see the current support of the deal in Parliament go up in smoke as such, with the reshaping of the political landscape. Elsewhere, market attention this evening will turn to the latest update from the European Central Bank. In his last meeting after 8 years at the helm, ECB President Mario Draghi is not expected to change the tone in which he is in reality held for his whole tenure by continuing to do whatever it takes to stimulate the European economy. For investors who have become very familiar with the Draghi put of negative rates and QE, a change in guard sees the former head of the IMF, Christine Lagarde, take hold of the monetary policy reins as of the end of the month. A change always brings a level of uncertainty, and in this case of the ECB, it will be whether or not Lagarde continues to support bond investors with even lower rates and further QE, or rather perhaps look and call for other measures such as fiscal response to help stimulate the European economy, a theme which seems to be in the current central banker playbook at present. In currencies, the New Zealand dollar, after a brief return below 64 cents yesterday, still maintains a recently formed 63.90 to 64.30 range of the past few days, whilst versus its major currency traded cross pairs, the Kiwi continues to scratch new highs as a result of being one of the better performers in the G10 basket of currencies. You can observe obviously all these details in our tables of our email. That's it for Thursday. A quick reminder that because of the Sky City fire, our Auckland deli room is out of action today, but we're still operational here in Wellington. Please bear that in mind should you have any dealing needs today. Have a great day ahead. Ka kite anō.